Interest rates are up and home prices are at record highs. And if you're watching this video, you might be asking, are home prices gonna go down? Is it still a good time to buy a home? And when will there be more homes for sale? Hi, my name is Chen and I sell real estate right here in Newport Beach, California. And in this video, we're gonna go over these critical questions as we update you on the local real estate market here in Southern California, especially Orange County. Now, there's three fundamental problems with the typical real estate market videos. And number one is that it's too much information to grasp. And number two, it's too confusing, or is it really a hype and not real news? And number three is not hyper local or not relatable to you. So today I'm gonna go show you a few charts of what it looks like right now, not a month ago or 3 months ago, but today. And then we'll compare that with how that's different from 2021 and at least a year ago. And last but not least, we'll talk a little bit about what to expect in our spring and summer market so that you make the best plans possible for you and your family. So first, I want to show you what the interest rates are right now because it's a huge driver on how the market behaves, especially for the buyers with the interest rates going up or down. So let's get right to it. So right here, you'll see today's rate is 5.64 for a regular 30-year fixed. Now, if you have any of these other types that you are considering, that's totally cool, but we're going to really just focus on the 30-year fix, which is the typical mortgage rate. Okay, that's what it is right now currently, 5.64, and you'll see that a year ago it was 2.55. Now, that's more than doubled. That's more than double the rate. So in case you don't know, for every 1% increase in interest rate, okay, your buying power as a buyer for a home is 10% higher. So that means you are 2.5% or more higher than it was a year ago. Okay, so that means cost has gone through the roof, and we're going to show you some charts of what it takes to buy a home and how much does it cost for you monthly, as well as how much income you'll need down the road. So that's coming up a little later. Okay, and then so you'll see currently 5.64 is our current interest rates, and then we have 2.55 that was 1 year ago, and just 1 month ago it was 0.5% higher. Okay, and if you look down at this chart here, we can really see how the interest rates have trended. Okay, as of the end of 2022, we were under 3%, but just in a short quarter, look how things have changed. We've gone from 3% all the way up above 5.5%. Okay, so now how does that impact you going forward, and how should you plan for this? Well, the feds have already suggested that they are going to be raising 6 more rate hikes toward the rest of this year and into 2023. So it's a possibility that we're going to see this going over 6% or 7%. So if you are looking to buy, this would be a good time to do so, understanding that it may be higher down the road if you wait. Okay, that's if you are ready to buy right now. So keep that in mind because this is going to factor into a lot about how you decide to purchase a home. Now we know about the interest rates. Let's take a look at the market in general so that you can understand what it takes to buy a home. How much does it cost? Okay, so for that, we're going to go into here where our charts are, and this is showing you prices right now, how they have risen from 2019 all the way to today at 2022. Okay, and we just, for Orange County, you can see we just cracked the $1 million mark as the median price home sales. These are homes that are already sold, that's being recorded, okay, and they're already been purchased. Okay, you see Orange County, between the 3 counties of Orange County, Los Angeles County, and San Diego County, Orange is actually the highest right now, and I'm going to show you the affordability index a little later on to kind of see how that kind of plays out. Okay, so that is the sale price, median sale price on the average for the counties. And I've been telling people that if they're looking to buy all the way back here in 2021 or even in 2020, Look how much you could have bought a home for back in, let's say, late 2020. All right, if we're talking about Orange County here, the blue line, okay, that means at just under $800,000 home in 2020, late 2020, would be $1,060,000 today. Okay, that is over a 20% increase in pricing. Okay, so really there is a time cost to when you buy a home, and the longer you wait as the prices are going up, the more you're going to end up paying. Just like the interest rates when they were down below 2.5, at right now it's 5.6, but it has a potential of going higher, just like these prices have a lot of potential to go higher as well. So next I want to show you what the inventory looks like. This is the active inventory, active listings that's on the market over time. Okay, you can see back in 2019, this is a normal range of price of inventory, normal range of the number of homes that are on the market for the 3 counties. Okay, and we're just gonna focus a little bit more on the blue line here, which is Orange County, which tends to be the lowest. Okay, and you can see all 3 of these counties correlate pretty closely. That means depending on the season, depending on the time, all counties are following the same buying behaviors. And so just looking at one line, you can kind of get an idea what the other lines look like. And right now you can see we're still at all-time lows per this chart from the last 3 years. Okay, so Orange County here, we're at 3330 as of right now, when a year ago in April, in 2021 in April, we actually had 3950. So that's roughly about 600 to 700 more homes on the market compared to today. But you can see that the lines are starting to tick up a little bit for all 3 counties. Okay, it's a little bit steeper on the Orange County side. That's because when the interest rates go up, there are people who are exiting out of the market, and homes are staying on the market a little longer, and so therefore they're not selling as fast, so therefore there are more homes available to buy. Okay, so that's your current active listing. We're still very, very low. Okay, so that still spells a seller's market. All right, next I want to show you is the pending sales. Okay, this tells us what the demand is like out there. The higher the pending sales, the higher the demand. And you can see a sharp drop right here in March to April. Okay, and that's because we finally hit that inflection point where interest rates are really high, and some people cannot afford it anymore, and some people have decided that that is too high of an interest rate to be buying a home right now. So you can see the interest rate has a direct correlation to how many people who are out buying a home, how many people are really out actively looking and getting themselves into escrow. As the interest rates continue to go up, we expect this line to start going down a little bit more, and the inventory to come up a little bit. So all this all makes perfect sense to how things should be playing out based on the interest rates. And then the last thing that everybody needs to know is, hey, if you put your home on the market right now, how long would it take to sell? Typically, in a normal market, again, we're looking back in 2019, this is what a normal market looks like. Okay, we're somewhere between 25 to 40-ish days on market is normal. And that means if you put a home on the market, okay, in a month, give or take, more or less, your home will be sold. But you can see this line plummet as the time goes on, and for the last starting probably at the end of 2020 all the way to today, it's relatively flat overall. And today you can see it's still at about a week or so for Orange County, 7 days, 9 days, and 6 days in San Diego. This just tells you what the market velocity is. It means that if you were to buy a home today, there will be less homes available for you. As the homes become more available, this number will tick up because interest rates will continue to climb, and then we will have less and less people actively looking, and the demand will come down, and hopefully the inventory will go up. We actually want that because we want a balanced market where it's equal for the sellers and buyers. Now that you've seen all that's happening, you might be asking, when will the price actually drop? And to get to that answer, we first need to look at what the home affordability is. And for that, we have this chart here. And this is from the California Association of Realtors. Before the crash, we had home availability at less than 10% right here, 2008, okay? And this is the US and this is California. And so you can see that was the lowest. Now fast forward to today, we have a 24% and 47% nationally, respectively. And you can see we're still at 24%. This is because when the prices go up, affordability goes down. The height of 2008 affordability was super low. And then over here now we can see that affordability has been slowly dropping as the prices have gone up. But we're still not at the lowest historically because we're still at 24 instead of 10 all the way back here in 2008. So, and then in the US we have 47%. So that's actually very good. Next I want to show you is if you look down here are the affordability ratings and scores. We're going to focus here on Orange County. A year ago it was 20. And in the end of last year was 17, and today in first quarter we have 13. So it's been drastically dropping. In Orange County, as you can see, out of all the Southern California counties, is the most expensive right now. The median home price is at $1,026,000. Right here in this column here, how much per month do you need in order to be able to purchase a median price homes? And it's $6,250. It's super high, compared to just under $4,000 in LA, and then around $4,500 in San Diego. And what kind of median household income do you need to be able to afford these kind of homes? And in LA, it's $157,200. Orange County, a whopping $250,000. That means $250,000 a year household income in order to qualify and be able to purchase a $1.26 million home. In Orange County, $179,600, almost $180,000 you need to make in order to purchase a home in San Diego. And so this is why these affordability index ratings are super low. So keep in mind those numbers as we talk more. These are the typical buyers and sellers that are out there shopping. We'll need to know how much it costs to buy a home. But as you know, in order for us to figure out what the market is going to do, we need to see what the buyer activities are. And just keep one thing in mind. I'm going to show you the type of buyers that are all out there right now. And are they going to continue to be in the market, or are they going to be out of the market for various reasons? In case you don't know, the typical buyer is usually a renter first. So renters of homes become buyers, and then buyers become sellers, and sellers eventually become buyers again, or second home buyers, or eventually investors. So now I want to show you what kind of buyers are out there on the market right now, and due to the interest rates and inventory, what's going to happen next, and so that you can position yourself as to where you are and what you would like to do next. Okay, so let's get right into it. So these are the 7 different types of buyers that are out there on the market right now. You have the must-buy home buyers. Okay, they're first-time home buyers. They already plan to buy a home one way or the other. They're going to get a home however long it takes and whatever amount of money it takes because they're already committed. So they are the first-time home buyers. And then number 2, these are first-time home buyers, okay, except they are not making enough money. Their income is not high enough, and they were high enough at one point when interest rate was 2.5% or 3%, but now at 5.5% or above, they can no longer afford the monthly payments. So they're going to be priced out of the market at 5.64% interest rate. So I'm going to go ahead and strike that through. Those are people no longer on the market. And then you have your first-time home buyers that have a choice okay, of buying or not buying, but they see that the interest rates have gone up. It's going to cost them more to purchase a home, and their monthly mortgage is going to be higher than they would like, even though they can afford it. For the most part, they're probably going to opt to rent for a while, although rental market is super tough too, so they're gonna have a tough choice to make. But I'm gonna guess that most of them are probably gonna opt to rent for a while and then decide what to do on buying a little bit later. And as I mentioned to you before, next year the interest rates might even be higher than 5.5 or 6%, so that might not benefit them, but they're looking at their current situation and wanting to be able to maybe wait it out. Okay, so those people are going to be out of the market. Then you have this move-up home buyers. A move-up home buyer are people who currently own a home and they would like a bigger home. These are the people that already own a home and have been looking for the last year or year and a half, thinking about whether or not they want to buy a bigger home because they're working from home and things like that. Unfortunately, these people are going to be out of the market because interest rates are higher. They may have an interest rate of 3% or lower right now. Why would they trade up for an interest rate of 3%, buy a new home, and be back at 5.5% or even 6% down the road? So these people are going to be out of the market as well. They're not going to be wanting to purchase a home and pay a lot more than what they're paying now. So we're going to strike these guys out. So those are people are out of the market as well. And you have moved down home buyers. These are home buyers that are empty nesters, or they have bought a big home at one time and stayed in it. They have really good equity in it and they want to buy a smaller place, either a smaller 2-bedroom condo or smaller 2-bedroom home, maybe out of the area, so that they can recoup on all the money that they have in their equity. Maybe they want to retire with that money, invest it somewhere else, or take a trip around the world and travel a lot more. These people are still in good shape to buy because they can still get their high price for their home and then use that money for whatever they need. And it doesn't matter because when they buy their smaller home, they're going to be able to afford it, and they can pay cash or they can pay with interest rates since they have plenty of equity. So these people will stay on the market. And then we have investors. These are investors that are always looking for good deals. Okay, unfortunately, we do not have any huge amount of foreclosures and things like that. So investors are having a hard time finding really good deals, and homes are selling at a record price and with high demands. So they are still waiting for good deals, and these guys will be sitting on the sidelines waiting for the market to come down, for sentiments to change, so that they can have more opportunities to buy investment homes and flip them or buy them to hold for a good value. Okay, so those people will stay on the market. And then you have your institutional investors. These are the people that are always buying real estate because they're playing the long game of buying as many homes, as many doors as possible to be able to reap the rewards over time in millions and millions of dollars. In case you don't know, the institutional investors are the ones that have been buying up a lot of homes, keeping the inventory really low for our market. So now you know everything you need to know about the real estate market here in Southern California, specifically in Orange County. I love to hear what kind of buyer you are. Maybe you're the not right now buyer, but definitely want to buy in the next 1 to 3 years, or you're still renting but see the value of buying a home for yourself long term, or you're an empty nesters and want to start taking advantage of the huge amount of equity that you have accumulated over the years. Put in the comment below your thoughts and subscribe to my channel if this video was helpful to you.